Hello and a very warm welcome to the brand new edition of To The Point, streaming to you from Mumbai. I'm Kriti Mishra, and on today's show, we have with us Chairman of State Bank of India, Mr. Rajnish Kumar. Mr. Kumar, welcome to Rajya Sabha Television, and thank you so much for talking to us.
Thank you.
First, let's talk about Ease 3.0. Finance Minister recently launched Ease 3.0 to improve customer relations and also to enhance ease of banking. How do you see this panning out?
So this is a very good initiative. It was started about 2.5 years ago. We had Manthan program, and that was done in the State Bank Academy at Gurgaon, where Mr. Rajnish Kumar, Secretary DFS, he had just taken over. I had also just taken over. We were just 2-3 months old in our role. And there all the MDCOs, EDs, MDs, we sat down. And we worked out a program where it is broadly under 6 broad, you can call themes or chapters. And the entire focus was that how do we provide access and customer service excellence. Plus the issues around how do we manage the risk. And then it was Ease 1, then Ease 2 and now Ease 3, where more emphasis has come on the technology part because a lot of developments have taken place. And to ensure that it is very transparent, evaluation is by an outside consultant. So BCG were appointed the consultant and they are continuing with that job. And this has given some sort of a roadmap for the banks. And there is benchmarking available. So I can see that in what areas other banks are doing better or where are we doing better. And then we do some course correction, and the scores under the Ease agenda, they have started improving. Right now SBI is on the top, of course, in most of the parameters, and we are ranked number 1 till December 19 evaluation. So final rankings, of course, will be available in March 2020. So most of the cases we are setting the benchmark, but there are few areas where others are setting the benchmark and we are making up.
For the public sector banks, she also talks about leveraging local language advantage.
The local language, one is that a clerical recruitment, what we call junior associates. If they have not passed a class 10, then they have to necessarily pass the language test. So interviews have been done away with. It is only the written test. But if you get allocated to any of the states, then it is a must for junior associate that they will go through the language proficiency test and they have to clear before they are given the appointment. This is not applicable as of now for the direct recruitment of officers. So local language definitely that is required, and even in our publicity materials, even our digital initiatives. So we try to ensure that multiple languages are covered. Say for example, when we did Buddy, we had available in 13 languages. We have our digital application YONO. YONO Agri Gold Loan or Agri Sector, we have covered so far in 5 languages and more are coming. YONO, the main is still English, but that also we are planning that it becomes multi-language. So it is very advantageous not only to the customer but to the banks also, because if we are only say single language English, then how do you cover the people in the hinterland? So English is widely spoken, but still there is a strong or there is a large population base who speak in their local languages, and from not from any other perspective but from the business perspective and customer service perspective, it makes lot of sense that the interaction, whether it is face to face or through any channel or any means of communication, it is adequately covered in the languages widely spoken, and that is what the bank's strategy is.
Moving on, sir, do you see a turnaround in the banking sector because of improvement in the asset quality due to enhanced resolutions because of insolvency and bankruptcy court?
It has made a difference. There would have been some frustrations here and there where we felt that the process was delayed, but it is better than any other means. So if you ask me preference wise, one is where there are complications, we would definitely prefer IBC route for resolution. If the amounts are smaller, less complicated, we may still prefer settling outside IBC. Compromise is another way, one-time settlements, which we use very effectively. Sale to ARCs we use very effectively, but the more complex the case is, better it is to get it resolved through NCLT process. And in terms of lending and borrowing, or the relationship between the lender and the borrower, definitely there is much more awareness. The borrowers also, they are managing balance sheet and their debt in such a manner that they don't get over leveraged, because now there is a real danger that they may lose the enterprise. And from lender's side also, lot of emphasis on whatever is the overall leverage and what are the coverage ratios available to service the debt. So there is a lot more attention to this.
But there are concerns and issue of credit takeoff in the banking sector,
which is very genuine. And it could be an issue around both. One is that, as I said, that a lot of deleveraging has taken place. So if deleveraging takes place, obviously the credit outstandings will come down. Second is, there is some sluggishness in the private sector investment. On the lending side also, the norms are definitely much more tighter. In fact, before you came, we were doing just our loan policy review. And we are trying to see that we maintain the position, in the sense that don't loosen up so much that again you are in the similar situation. But wherever we find that policy has become tighter more than what is required, so all those things we are reviewing, and we want to have, I am talking from State Bank's perspective, a loan policy where there is enough flexibility to do the business without ignoring the safety aspects.
And how do you foresee the growth of corporate credit in the next fiscal?
I think it will be much better than what it is, and that is, I am saying, based on the sanctions which we have done in last 3 months. Our sanction pipeline is fairly good. Right? March, the credit growth always in any case gets distorted, because this month means March. There are a lot of drawdowns which happen, and year end, and that's not the best indicator of credit growth. March is not the best indicator. But otherwise, whatever sanctions we have done, and as they start getting disbursed, the next year the growth rate for the banks in general, I believe that it will be much higher than what it has been this year.
Sir, the RBI governor also says that prudent lending does not mean that you stifle lending.
Absolutely.
How is SBI maintaining that balance?
So RBI, in any case, about the policy guidelines, whatever has come in the past, one is about from the liquidity perspective. So they have been very, I would say, liberal, met the needs of the economy, have provided sufficient liquidity. To respond to the needs of the economy at particular hour, and despite some criticism around whatever regulatory forbearances have been given by RBI for certain sectors, and that also takes into consideration that at times we may have to do some certain such things which otherwise normally should not be done. So RBI's approach has been also to take care that we meet the needs of these things, recognize there is stress in certain sectors. Through policy interventions, if that can be alleviated for a year or so, that should be taken care of. But otherwise, in terms of the pricing, which is interest rates, liquidity, I think every effort has been to promote more credit for the needs of the economy.
Mr. Kumar, banks are not only facing competition from fintech companies but also large technology companies that are entering into the banking space. How are banks getting ready or gearing up to face this competition?
So we are becoming a technology company. That is the only way. So there are two ways to compete in this way. One is you yourself become a technology company, and second is wherever you can forge partnership and alliances, you do it. We have certain advantages as a bank. Customer base, say for State Bank of India, more than 43 crore customers. How can a fintech can get that kind of? But they come up with many good innovative solutions, which if I develop everything, it's very time consuming. There the collaboration approach works very well. They bring the innovation, I bring the scale, and it's a perfect combination. About the large techs, in terms of customer base or database, they are as big as any large bank. But still, a bank is a bank. And that advantage of trust, which people develop over a period of time, and particularly when it comes to money. So it is not that incumbent banks like State Bank of India, we have certain USPs, or you can call it competitive advantages. Wherever it is about the new technology, new age economy, we have to respond fast and act, behave like as if you are a technology company. And this is for State Bank of India. We are precisely doing that. And today, in terms of our capability to lend to the new age economy or be part of that system, so that is very high. We have the same data analytics capability which anybody else has. So I am not at a disadvantage in any manner, and we are not fearful also because of this strategy, that we also move in that direction, and we along the way collaborate also wherever it is required, and we are ready to collaborate with large tech, small tech, mid tech, whatever you call it. And sometimes collaboration can be a good strategy to compete.
So there has been a paradigm shift in the banking sector because of proliferation of mobile banking, internet banking, and also the digital revolution. But that also poses massive security challenge. How is SBI bracing for it?
They will remain. So anything you do, it is not always everything plus. Everything brings a problem. If it is a Facebook, so it connects, but at the same time, the privacy issues we are seeing. So anything you do new, it will bring some challenges. So the advantage, sometimes we believe that digital is very cheap, but actually it may not be as cheap. Say for example, digital transactions, right? You create the infrastructure and the transaction cost come down, but still there are many costs, and the challenge of the security, the breaches, the fraud, the privacy. So all these, like when I joined the bank 39 years ago, so there was no issue around data protection. There was no issue around cyber security. That was not in the, in the dictionary in 1980. Cyber world, I doubt whether it was in dictionary in 1980. So whenever you do something new, it is not that it will be all on the plus side and there will be no risk or there will be no negative. So we have to be mindful of that, and say cyber security or data protection or data privacy, these are the large or the big issues when we are moving and talking of a world of, say, IoT, Internet of Things, and where 50 billion devices will be connected. So this will bring all these problems.
Let's talk about merger of banks. Finance Minister announced this mega merger. How is SBI gearing up for it, keeping IT integration in mind?
One is that we already merged, and that merger was done very smoothly. And I think we need 4 or 5 large corporate banks. And this is not something which is again envisaged today. It was done 25 years ago. That India needs 4 or 5 large corporate banks. And at the same time, because country is big, population is big, geographically we are well spread. Segment wise also there are multiple segments. So in a country of this size, there will be scope for everyone. So the national landscape for banking is that you have a small finance bank, you have some regional players, you have microfinance institutions, you may have some specialized institutions, which we have not seen so far. I have not seen anyone who is doing that I will do only agriculture or I will do SME. That kind of this is not there. And then you need large banks which can take care of all segments like SBI, or post-merger the banks like Bank of Baroda or Punjab National Bank. So that is what will be required. So very large, medium, small, very small. but there is a place for everyone.
Talking about bad loans, sir, you said that worst is over on bad loans. Do you expect further slippages now?
In terms of NPA, slippages, recognition, maximum was 2018, and this year, particularly the last quarter and this quarter, in terms of recovery and resolution, these are going to be the two best quarters. And what I believe that if there is no shock, things should be normal in the coming financial year. But sometimes many unknowns come. Not today, in this time when we are talking. So 3 months ago we did not know about, coronavirus, right? But a new threat has emerged about which is impacting businesses. When such a thing happens, then any statement like this worst is over, so that becomes questioned. But if there were no such big external shocks, then we are in a normal period for the next financial year onwards.
So do you foresee any kind of impact of coronavirus?
It is impacting the businesses. We have not seen any major impact on the businesses or the spread of virus. Luckily, touch wood, and I hope that we remain like this and there is no spread. But globally, it is impacting the businesses. We are seeing that impact on the stock market's performance, and we cannot, this threat. It's a real threat, and everybody is hoping that it gets contained. But it is impacting many sectors of the economy. So, how much, as part of being the global supply chains, how much does Indian economy get impacted? That we have to see. As a result of that, what impact it gets on the balance sheets or the asset quality of the banks. That is also we are very watchful. But so far, nothing is clear.
But banks are still weighed down due to exposure to telecom and power sectors.
Power sector, more or less, lot of resolutions have happened in the past 1 year, and quite a few cases are in NCLT. So, power sector NPA in terms of the resolution as well as in terms of the provision coverage ratio, there is no major issue now. So, I am not worried about the power sector. About telecom sector, things are still going on. Every day we read or get to know through you people that something is happening. So let us see when that something comes out really. But definitely that is one sector which is receiving maximum attention, and hopefully things will be resolved, and that is what the hope is.
What is your assessment on growth? The government says that green shoots are visible in several sectors.
So one is that 4.7%. I presume now that is the bottom. So we can only look upwards. Whatever announcement and measures government has taken, so there is always a time lag. Even when people ask me about government did the corporate tax, where is the investment? So it is not that government has announced tax rate today and tomorrow there will be 20 factories coming in. So that has started happening. So the impact of the measures which government has taken, I believe that it will start yielding the results. But again, as I said, that we are also now part of the global economy. So at times that also impacts your growth.
And experts are also bullish on SBI's IPO.
So we are all set for it, and today I think the anchor book for institutional investors, it got over. I haven't got the numbers as yet, but the response to the SBI card IPO, I think we are receiving phenomenal response. I would say beyond expectation.
Lastly, sir, there's an ongoing debate on public sector banks versus the private sector banks, and also the governance standards. What are your views on it?
Both are same.
Really? Then how do
Then you have to see for yourself. You see, like, say for example, you take aside HDFC Bank, but all other private sector banks and the public sector banks, are you finding any major difference if the banks were in corporate lending? Anyone who was in corporate lending at almost similar problem. But yes, if I say that there is no difference, so that's not the right statement. The key difference is that the entire HR strategy, policy, compensation structure, salary structure, everything is very different. So one, it is comparing an apple with an orange. That is what I have always been. Should it be like this? My answer is categorically no. It should not be like this. A bank should be a bank. Even the compensation structure, why should there be a difference? Government can maintain its ownership and keep it there. There can be a certain obligations around the government, whatever their social banking and financial inclusion initiatives are there, that public sector banks should do, and that is what the purpose was. We cannot expect it from private sector banks, where the sole consideration largely is creating the value for the shareholders. In our case, shareholders, majority shareholders is Government of India in any case. So some of that agenda has to be there. One way is that all that gets compensated. This is just you can call it a wishful thinking. Let me put it this way. So for social agenda today, were government to decide that whatever are the costs being incurred, they will all be compensated. Then the advantage is that even private sector bank will do. This is my analysis. And in terms of compensation and governance, the expectation and the bar can be the same. So ultimately, it should become ownership neutral. So I believe that if we do that, probably government will also, in terms of valuations, will make more money, will not be required to give capital from time to time. So from governance perspective, if they leave it free, for compensate for all the activities which are to be done for the government, then we can have a very efficient and a very strong banking system. But that is not something you can do overnight. Let me also tell.
On that note, thank you so much for talking to Rajya Sabha Television, sir.
Thank you.